Chapter 14 is all about capital gains release for individuals. So remember in the previous chapter that we looked at how to calculate the capital gain, and then once we've got the gain, how to calculate the capital taxes. So the capital gain is created when the proceeds are greater than the costs that we're allowed to deduct. And we can reduce this gain by things like our annual exemption and any losses brought forward. But what we're looking at in this chapter is some other reliefs that might be available to the individual depending on sort of things like what sort of asset they might be selling. So there are 4 capital gains reliefs that we've got overall, but what I want to draw your attention to is what is actually appropriate for our exam. So there's business reliefs, which cover rollover relief and gift relief. We've got entrepreneurs relief, and we've got main residence relief. And these are the 2 that you need to learn for your exam. So we're going to look at what sort of things attract entrepreneurs relief, and then secondly, we're going to look at the main residence relief. So this is when you sell your own home, but your home is not exempt. So you should remember from the previous chapter that if you've got your main residence and you've always lived there with your family as your main home, then it will be fully exempt. But if you've ever rented it out, or if, say, you've used it partly for business purposes, then some of it might be chargeable. And you may not be able to reduce that to 0 with your annual exemption or any losses brought forward. So we're going to look at how that main residence relief might be applied. So business reliefs, we're not going to cover in any detail in this chapter. They do also apply to companies, whereas entrepreneurs relief and main residence relief is only for individuals. So let's start with the first one then, the entrepreneurs relief. So entrepreneurs relief relates to a situation where an individual is making a material disposal of a business asset. So we're not talking about selling personal things here, like selling a chattel, like an antique, or a rental property or something like that. It has to be a business asset. So we would normally be things like selling some land, some buildings, or maybe some goodwill. And remember, it's only available to an individual. So it might be a sole trader who's got some business assets and they sell them on. It's not available to companies. So we won't be looking at this again when we get to the companies chapter. So you work out your gain, then you identify whether you've got any of these sorts of assets that attract this relief. And these assets must be kept separate to the other assets. So if you've got any assets that you dispose of and create a gain, like an antique, then that would not be something that would be entitled to this entrepreneurs relief. So we do need to keep those separate. So you'd have your entrepreneurs relief assets and then your other assets. Now, what do we do to claim the relief then? Well, we're going to look at how to calculate it, but basically in simple terms, any gains that qualify for this relief will only be taxed at 10%. Now, it's available for all of these business assets, but if we just scan down to this 3rd bullet point here, it's up to a lifetime limit of 10 million. So it's not an annual limit of 10 million, it's a lifetime of that individual. So once they've sold gains that exceed 10 million, then that means they won't get this entrepreneurs relief, even if it were a qualifying asset, and it would just be taxed at normal at the rate that is applicable to that gain situation. There are some criteria that you have to meet. So you do have to make a claim by the individual. We've got some dates here. So it must be made by the 1st anniversary of the 31st of January following the end of the tax year in which the disposal is made. So we've got an example there that if you're using the current year that you're going to be examined in 1920, then you've got till January 22 to make that claim. So the first thing we need to look at then is what sort of assets will be entitled to this type of relief. So there are 3 categories of disposal that you might get in a question. So if you see any of these 3 scenarios, you need to separate the gain to calculate your entrepreneurs relief. if you've got any other situations, then they will just be dealt with as we did in chapter 12 as a normal gain calculation. So the first one we've got here is disposal of all or part of the business. And we'll see this in more detail over the page in a minute, but part of the business means a material amount. Now, they don't give a definition of how much it must be worth or what percentage it must be, but it will make it clear in any exam question that you are dealing with a material part of the business. So a significant part of your business. We're not talking about selling a single asset here. We're either selling everything that the business has got or a significant part. Or it could be assets when the business gets ceased. So if the business closes down and then we've got to get rid of everything, we're not going to get rid of all of that overnight, but as we sell it, those individual assets will attract this entrepreneur's relief. And then the final one is dealing with shares and securities. So let's look at these three situations in a little bit more detail. And we've got this over the page in a table. Now, don't get too overwhelmed by how much information is in the table. Just pull out the key things to make sure you understand it. So basically, you've got three situations: business assets, cessation of a trade, and shares. So we're going to look at these three categories and pull out the key things that we need to remember. So when we sell all or part of the business, remember it must be an individual and it must be some sort of trading activity. So it's a business that's got these assets with a view to making a profit and they've decided to sell them. Now, the business must have been owned by the individual for at least 2 years prior to the date of disposal. So it's not the asset that you have to have it for at least 2 years, it's the business that has got the business asset. And the disposal that takes place must be of a business that's a going concern. So you've done a little bit of going concern in your financial reporting, financial accounting papers. Going concern means you're going to trade for the foreseeable future. And that would normally be beyond, 12 months. And then where we talk about here, part of a business, there's a little bit more definition here. Part of a business is something that is a substantial part and can be independently operated. So if I run a business of, let's say, tables and chairs, and I sell my tables and chairs, some of them to the same market, some I might just have a table market and just a chair market, and I decide to get rid of the chairs. So the table market will still carry on as normal, and that would be selling part of my business. So I can still carry on with the other side of the business even though I've sold part of it. Any assets that you might sell as part of your cessation. So the business, again, must be owned for at least 2 years before the disposal takes place. And the disposal must take place within 3 years of cessation. So whatever date that I decide to cease trading, let's say I cease trading on the 31st of December 17, I've got 3 years until the 31st of December 20 to get rid of those assets. And the reason we do this is because, it might take quite a while to get rid of a business's assets when you close down, like your buildings and your land, might be sitting around for a while to make the disposal. Briefly looking at the share situation, so these are shares that are in an individual's personal trading company and the individual is some sort of employee. So they've got to work for the business. And it does say here it can be full-time or part-time. There are no special rules in terms of how many hours that you must be working. And it can be quoted or unquoted, and that just means as per the stock exchange. And then I want to pull your attention down here as to what is a personal trading company. And it's something where the individual has got at least 5% of the ordinary shares. So you should have done ordinary shares in your financial accounting as well. These are the shares that a business has that give you voting rights. It gives you power. So you've got to have at least 5% of those. You must work at the company and it's your personal trading company. All right, so look at the situations to see if any of those apply.